This whole AI frenzy, it feels like we've seen this movie before, right? The incredible excitement, the promises of a totally new world, that feeling that you're right on the edge of the next big thing. It feels an awful lot like the dot-com bubble in the late 90s. So the big question is this time actually different, or are we all just headed for another massive crash? And that really gets to the heart of what we're talking about today. Sir John Templeton's famous quote just nails it. The hype around AI is absolutely off the charts, and the money flooding in is just staggering. But the real question is still hanging in the air. Is this time truly different, or are we all just about to relearn a very, very expensive lesson? To figure out where we're going, sometimes you gotta look back at where we've been. I mean, the dot-com bubble wasn't just hype, it was pure mania. And the parallels to today are kind of spooky, aren't they? A ton of investment flooding into companies with no real clear path to making a profit, a media frenzy just pouring fuel on the fire, and this intense feeling of FOMO, fear of missing out, that drove people to make riskier and riskier bets. And when that bubble finally burst, oh man, the fallout was just catastrophic. All right, so here's what we're going to cover today. First, we're going to look at why the AI boom feels so familiar. Then we'll dive into the massive bet being made by just a handful of tech giants. We're going to uncover this strange circular flow of cash that might be pumping up the whole market. After that, we'll talk about something called the data wall. Then we'll ask the big question, is this a bubble? And we'll wrap up with a solid game plan for you and your investments. Okay, so to really get a grip on what's going on, we've got to look at the handful of companies that are basically steering the entire stock market right now. Seriously, their fate is pretty much the market's fate. We're going to break down 3 hidden forces that are driving this potential bubble, starting with the biggest players in the game. And that brings us to our first hidden force, a high-stakes, all-or-nothing arms race. It's being fought by the companies everyone's calling the Magnificent Seven. And here's the thing, whether you know it or not, if you own even a basic index fund, you're already betting big on them to win. And wow, this chart really shows you just how powerful they are. These 7 companies, we're talking Amazon, Microsoft, Alphabet, Meta, Apple, Tesla, and NVIDIA, they now make up a mind-blowing 36% of the entire S&P 500. Just to be clear, the S&P 500 tracks 500 of the biggest companies in the US. So yeah, when these 7 sneeze, the whole market catches a cold. And right now, they are all in this brutal fight to completely dominate the world of AI. I mean, the amount of money they're throwing at this is just, it's almost impossible to wrap your head around. We're talking a combined $330 billion in planned AI spending in a single year. To give you some perspective, that's more than the entire GDP of countries like Finland or Portugal. This isn't just an investment. It's a world-changing gamble. Okay, let's break this down, because these numbers are wild. Amazon is just going for it with $100 billion. Microsoft and Google are right behind. And look, even the companies spending less here, like Apple and Tesla, are still dropping in billions of dollars. The message here couldn't be clearer. They all think that whoever wins the AI race will have an insane amount of power, and they're ready to spend whatever it takes to be the one on top. So all this insane spending, it leads us straight into our second hidden force, what some are calling the AI money machine. And this is where things get, well, kind of weird. When you really start to follow the money, you find this circular flow that might be making the entire AI industry look way healthier and way more profitable than it really is. All right, so check this out. It works kind of like this. A giant like Microsoft invests billions into a company like OpenAI. Great. But then OpenAI turns around and pays that money right back to Microsoft so it can use their giant data centers. Then Microsoft takes that cash and buys the AI chips it needs from NVIDIA. And then to complete the loop, NVIDIA invests some of its huge profits back into AI startups, maybe even one like OpenAI. Here's the kicker. Every single step in that circle gets counted as real revenue, which pushes stock prices higher and paints a picture of explosive growth. There's a great analogy for this that just makes it click. It's like you pay your friend $1,000 to dig a hole in your backyard. Then they pay you $1,000 to fill it back in. Nothing of real value is actually created, but on paper, you both just booked $1,000 in revenue. It makes you wonder, right? How much of this AI boom is genuine innovation, and how much is just clever accounting? Or think about it like this. It's like a new gold rush. You've got NVIDIA selling all the shovels, which are the chips. You've got companies like Oracle providing the land, the data centers, and you've got OpenAI doing all the digging, trying to build the next world-changing AI. Everybody's making a ton of money helping each other dig, but it all leads to one huge question. Has anyone actually struck gold yet? the actual real-world profits that would justify these insane price tags, they just haven't really shown up. And that brings us to the third and final hidden force we're going to talk about. And this one's a potential showstopper. See, the entire market is betting that AI's crazy fast improvement is just going to continue forever. But there's a chance we're about to slam into a fundamental limit, something called the data wall.
So what is the data wall? Well, it's pretty simple, actually. It's the point where AI has basically read the entire internet. For years, these AI models have just been inhaling every piece of public data they can find, every book, every science paper, every blog post you've ever read. But that library of human knowledge, as huge as it isn't infinite. And pretty soon, there might not be anything new left for AI to learn from.
And here's the crazy part. This isn't some far-off sci-fi problem. It's happening fast. Some projections show that by 2027, that's just a couple of years away. AI models will have basically consumed all the high-quality data that humans have ever put online. If that happens, the exponential growth we've been seeing could just slow to a crawl. And the massive expectations that are built into these stock prices could come crashing right back down to earth. And see, this is a problem that's pretty unique to AI. An AI is kind of like a student who can only learn from the textbooks they're given. It can become an expert on everything that's ever been written, but it can't go out into the real world and create brand new knowledge from new experiences. We humans, on the other hand, we learn by doing, by trying and failing, by creating. For AI to get past this data wall, it's going to have to learn how to do that too. Okay, so we've got this insane spending, this weird money machine, and this data wall looming on the horizon. Let's get back to the million-dollar question, or maybe trillion-dollar question. Is this an AI bubble? Well, the answer isn't a simple yes or no. On one hand, you've got all these flashing red lights, crazy valuations, a clear mania driving the market, and these potential limits to how much better AI can get. It looks and feels a lot like the dot-com bubble. But then, on the other hand, it is different this time. Unlike so many of those dot-com companies that had nothing more than a catchy name, today's AI giants have actual products that people use, and they have a much clearer path to eventually making a ton of money. So after all that, what's the final verdict? Well, the source material pulls no punches. Yeah, it's probably a bubble. The signs are just too obvious to ignore. But, and this is a huge but, there is absolutely no way to know what inning of the game we're in. This could be just the beginning of a years-long frenzy, or we could be way closer to the top than anyone wants to admit. Okay, so knowing all this, the big question for you is, what do you do about it? How do you protect yourself and your money? Let's stop talking about the problem and start talking about the solution. Here are 3 super practical steps you can take to get through the chaos and maybe even come out way ahead. All right, this is a 3-part strategy and it's super practical. First things first, and this is the most important one, keep investing. Seriously, consistency is your best friend. Set up automatic monthly investments into a simple, low-cost index fund, and whatever you do, do not panic and sell when things get scary. Second, work on increasing your income. Get that promotion, start a side hustle, whatever it takes to build up a pile of cash. That cash is your ammo to buy great investments when they go on sale during a crash. And third, diversify. Don't put all your eggs in one basket. Spread your money out across stocks, bonds, real estate. It's your best defense. And listen to this quote because it says it all. Continuing to invest through a crash could be the best thing you ever do. Market crashes are not just scary events. They are massive, once-in-a-generation opportunities to build serious wealth. For the people who can stay calm and keep buying, a big downturn can be the single best thing that ever happens to their portfolio. So really, it all boils down to this. Don't panic, prepare. Just by understanding what's going on, the risks, the history, the opportunities, you put yourself ahead of 99% of people. It means you can be the investor who is calmly looking for opportunities while everyone else is running for the doors. Look, at the end of the day, another crash is coming. It always does. History guarantees it. So the real question isn't if it's going to happen. The only question is, when it does, will you be one of the few who is truly ready to seize the incredible opportunity it's going to create?